I am very much feel that that markets do a better job of allocating resources than small groups of unelected people. So it can hurt, but it's in the long run, people are better off by having market forces dictate where capital goes. We're the only country in the world I can think of in history that is ignoring its own natural resources. I mean, you know, up until 1945, countries would go to war over natural resources. They did not see it as some sort of luxury to ignore them. Again, I understand the environmental concerns. I fully support them. But again, you have to balance those out with the needs of people. Right now, as you may know, I think of the 20 wealthiest counties in the United States, 11 of them are in and around Washington, D.C. And that's an area that really has no industry to speak of, no manufacturing to speak of. The industry largely is influenced.
Jason Trennert, thank you so much for coming on. I'm really excited to talk to you. Last time we spoke, there was a bit of despair about the prospects for forever deficits and debt that was completely out of control. And this election seems to have shifted things a little bit. There are kind of three new topics kind of quickly. You know, all of a sudden the markets are thinking that there's a whole lot of deregulation coming. Tax policy is a big benefit. And then we've got this wild card that just happened, the Department of Government Efficiency, that I guess just as little as 8 weeks ago didn't even exist. And here we are with the formation of something that actually has some potential to expose waste, government waste, that really hadn't been on any candidate's docket across the Senate, across the House, and both presidential candidates. And here we are. Is there any hope that this could actually work? And what do you think the real issues are now for the markets?
I'm quite excited about DOGE, and I was just, as we talked about, I was just on the road for about 2 weeks, and I was surprised at how quickly the idea of a Department of Government Efficiency got into the lexicon of investors in Seoul and Zurich and London, so that, you know, by within a week, people are actually talking about it. And I would say this seems far more serious, or a far more serious effort to rein in government spending than, let's say, something like Simpson-Bowles, which was very well intentioned, but very much inside the beltway approach to doing it, and it was quite easy for people on both sides of the aisle to ignore it. And you know, politicians, generally speaking, are put on earth to give stuff away, not to take stuff away. So it's there's unless there's actually the kind of frontier justice of higher interest rates, in my opinion, government spending reform doesn't really happen. This time it may be being forced to happen simply because the president wants to keep his tax cuts that were passed through the TCJA in 2017. And it's going to be hard to do that without some good faith effort to either raise, you know, you don't want to raise taxes, but there's going to be some good faith effort to save money if you want to keep the tax cuts. And so that's why I think there's this renewed focus on it. And I think, you know, thank goodness, because I do think it is very difficult. It would be very difficult to run deficits of this magnitude for a lot longer without it having some meaningful impact on either interest rates or inflation.
I think so too. I also suspect that these two individuals, Vivek Ramaswamy and Elon Musk, carry a heavy load of credibility for the private sector. And I think they're approaching this as a crowdsourced type priority list. They're very prolific on Twitter. They're collecting recommendations from everybody, so that they're going to be able to look inside the budget. So their potential to find the low-hanging fruit right off the bat should be very high. Where do you think this comes out? You know, I'm kind of hoping that what happens is that they shine a light on all of the people that have connected themselves to the government who are enriching themselves with fat margins. And that by exposing that, I think you're going to get not only a lot of actual cutting, but you might get a lot of voluntary withdrawal too, where people just don't want to be exposed.
Yeah, you might. I mean, and I would say, listen, I think that when people start talking about Trump, I think people tend to, and I think it's partly because President Trump himself, tends to speak in such such grandiloquent terms that people tend to get caught up, and they kind of lose sight of kind of just the general direction of things, and they get very caught up on the details. I think just the fact that we're talking about cutting spending is a big deal, because there's, again, especially since QE started, there's been no serious discussion of cutting spending. And there's about 3 million federal workers in the federal government. And to my knowledge, from the things I've read, only about 20% of them show up to work every day. So if you just think about the waste in just real estate alone, that's pretty significant. So you either want to get more productivity or you need fewer workers. And I just as someone who runs my own company, I'm very skeptical about the idea that people working from home are as productive as people working in an office. I could be old-fashioned or old, but I haven't seen a lot of evidence to suggest otherwise.
Is the number that come to work in your operation a little bit higher than 20%?
Yeah. Well, it's here it's 4 days a week. So we do have a 1-day flex day, which is an overhang of the pandemic, which is not the worst thing, I think, but it kind of sets the tone, and I think it does make you wonder. Certainly. Again, government agencies generally just grow. They never die. I think Ronald Reagan said there's nothing closer to eternal life than some sort of government agency, right? And they just find new things to regulate or to look into. And I do think obviously there's a role for federal government. I don't want to disparage anyone that works for the federal government, but I also think that it has to be in proportion to really what the efforts or what the goal of federal government is, which is really just to facilitate private enterprise. It should not be an enterprise in and of itself. It's something that should help people as opposed to something that becomes its own industry. Right now, as you may know, I think of the 20 wealthiest counties in the United States, 11 of them are in and around Washington, D.C. And that's an area that really has no industry to speak of, no manufacturing to speak of. The industry largely is influence the legislative process in some way, either through on the tax code or laws or government contracts, and that's not healthy. I think it not only is it likely wasteful, it also sows distrust among the taxpayer that's far from Washington, D.C. about the efficiency of what's going on there.
Well, capital that's directed to and by the federal government, or any government for that matter, just has a different objective as its purpose. And so there's an inefficiency built in, an economic inefficiency for the system when the government is taking that capital and spending it in any way. This show is being brought to you by our sponsor, Trueflation. Professional investors and economists, and probably any casual observers, know that government inflation statistics are only an approximation of what real inflation is. Not only that, but the government has a conflict of interest because high inflation can be so damaging to the economy, the deficit, and our $34 trillion in debt. Trueflation collects over 13 million pricing data points. Most are updated daily to reveal inflation with precision for asset managers, governments, companies, and the general public. Check them out at trueflation.com. And so there's, one of the things that people are going to be talking about a lot is that the federal employees, as well as state and local employment, was a large portion of the employment growth over the last few years, and that this constant deficit spending was actually stimulative to the economy, partially because more people are employed. As this unwinds, how do you see it? How do you see ultimately this should be a very big benefit to the country, but in the near term, it may not be. Just like in Argentina with Milei, the first thing he did was eliminate a lot of jobs. How do you see that playing out? And my suspicion is that both Elon Musk and Vivek understand that I've seen $500 billion worth of payroll, give or take, in the federal government in a $6.5 trillion spend. And so there's probably a lot more easy money to find without firing employees than by just exposing all of the contracts that are no bid, et cetera.
Right, and I think here, again, it's instructive for people to think more directionally as opposed to specifically, right? It reminds me of Peter Thiel saying, his President Trump's detractors take him literally, but they don't take him seriously, and his supporters take him seriously, but they don't take him literally. The hard part about what the incoming Trump administration is trying to do is you're trying to do this without an obvious crisis. And so whereas Argentina, there was probably an obvious crisis, and there was really there was a real sense that this had to be done. Here, I would say if you're in the half of the population that doesn't own financial assets, you feel as if there's a crisis. But for the people that do, or the upper 50% of income earners, they don't see much need for this. And this is the political challenge that the administration may have. But there's no question in my mind, I keep going back to QE. QE is the fig leaf that allowed this kind of spending to happen because we were able to manipulate interest rates. If it weren't for that, I'm convinced we would already be in crisis. If the Fed's balance sheet weren't $7 trillion, if it were a mere $3 trillion or $4 trillion before the pandemic.
Or 1.5 where it started.
Yeah, right, exactly. I mean, it was 800 billion before Bear Stearns failed. So that was the fig leaf that allowed a lot of this extra government spending to happen. So, but the hard part again is that at least outwardly, if you have a job, you probably feel okay. And so economy may slow down, but I tend to think it'll be a little bit more localized. It'll hurt in Washington, Northern Virginia, and Maryland, and I feel badly for people in that area. But there should never be a place in the United States that doesn't have a business cycle. I very much feel that that markets do a better job of allocating resources than small groups of unelected people. So it can hurt. But it's in the long run, people are better off by having market forces dictate where capital goes.
Actually, I just thought of something. Maybe you've looked this up, but it would be very interesting to see what the GDP of the 50-mile radius around Washington, D.C. has done, compound growth over the last 20 years. It must be extraordinary.
Yeah, I haven't looked at it, but I'm sure it looks a lot like education spending, or CPI of education, or CPI or university education, or CPI of healthcare. When there aren't market forces to dictate what inflation should be, if you're subsidizing something, the rate is going to be significantly higher. And conversely, if you start taxing something, you're going to get less of it. You subsidize it, you'll get more of it. So that part of the country has been living high off the hog for a long time. And again, we've papered over it with QE and deficit spending, but eventually the bill comes due. We saw some evidence of that in the past, but not recently.
So that's on the spending side, and that's pretty interesting because it's brand new. But on the other side, where the economy can start generating more, we have two issues that helped Trump get elected. And I'd love to hear what you think about these. Deregulation, I think that animal spirits were let loose, I think, mostly because of the prospects of dismantling some of the regulations that have been poured onto the country over the last 20 years, but certainly since the last Trump administration, and then the tax policy. And so how are those going to work through the economy and the markets? Yeah.
Well, listen, I think, again, listen, when you have this kind of debt, going back to the problem at hand, right? Aside from like what you desperately want to have happen, which is to have the private sector drive growth. But I also think we're at a point where we have to have the private sector drive growth because we're reaching a limit in terms of government spending and deficit spending at which that there'll be bad outcomes, right? So there's only a couple ways to do that. You can either cut spending, raise taxes, have productivity gains, or you could just accept higher inflation as a matter of course and inflate your way out of the problems. The most preferred way of those four options is productivity. And deregulation is, in my opinion, especially of the financial sector and also to a certain extent of the energy sector, those are two kind of gimmies. It seems to me. I don't see who loses from that. Particularly the energy sector. This is a drill baby drill campaign. People very much support that, and I think it's one place you could get pretty easy productivity gains pretty simply just by driving the cost down of crude oil and gas at the tank, right? I think in terms of financials too, just to the extent to which you get more capital moving around, especially to smaller businesses, I think that's something that could unleash a lot of productivity and a lot of growth. You mentioned something before about this intersection between government spending and capitalism. That the irony is that greater government spending is not necessarily bad for business, but it tends to be enormously good for big businesses. Big government is good for big business. It's not good for smaller businesses that don't have the lobbyists, the accountants, the lawyers, the consultants that get to write the rules in their favor. And most of the employment gains in this country over time have largely been borne by smaller and medium-sized businesses that eventually then go on to become very big businesses. But we don't want to kind of, in my opinion, we want to really stay away from the idea that you just have very large incumbents that are just staying in place without any sort of market forces affecting them. Then you get a more European type of economy where the social classes are more fixed. It's really not the American way, in my opinion, and it's part of the reason why Europe has much slower growth. So financials and energy, to answer your question, are two places where I could see the deregulation having a meaningful impact, and also pretty quickly. It's something that the good news is you don't necessarily have to, particularly in regulations, you don't necessarily have to change laws. This may be the interpretation of the laws where you can do things a little bit more quickly than you could in other areas like taxing and spending, which obviously requires legislation.
And how about on the tax side? We know that the tax cuts will probably easily be passed, but he was also, extended. But I guess he was also talking about lowering them further. And how does that play out?
I think it's going to be difficult to cut taxes a lot more. Candidly, I think it's a great wish. Frankly, I think but I do think cutting the corporate tax rate from 38 to about 21 or so was an enormous tailwind for business expansion in the first Trump administration, and also something that the Biden administration benefited from as well. I would probably, more than even just lower taxes, which I'm completely for, I would love to just see a simpler tax code. Right now there's about 3.5 million words in the U.S. tax code. There's about 900,000 words in the Bible, 600,000 words in the Old Testament, 300,000 words in the New Testament. So as just a businessman myself, I can tell you, just having the ability to do your own taxes, which, there was no federal income tax in this country until 1914, and it was really one page. That makes a big difference. But here there's a lot of effort and time really trying to comply with the tax code or beat the tax code, as opposed to just, I would say, making the tax code easier, broadening the base. You get more compliance. It's all good, and that's a form of regulatory easing as well. That I think almost no matter what the tax rate was, it would be a big benefit to businesses and to people. And again, I feel very strongly. You've kind of triggered me on this, Bob. I don't view people's income as some sort of dispensation from government. I think it's which I think Ronald Reagan said, a lot of Democrats tend to view every day as April 15th, and Republicans look at every day as July 4th, right? And there are a lot of big government types that view your income as something that they allow you to keep. And I kind of view it the other way. Government spending is what we allow them to spend, as opposed to our income being something we're allowed to keep. And I think if we get back to that conception.
I think they coined the term fair share.
Yeah, fair share.
It's a wrapping for that.
Yeah,
idea.
right. And of course, the very first, when the federal income tax first went into effect, it only affected about 1% of the population. The alternative minimum tax, when it was put into effect, affected very, very small group of people. But all of these things, almost like government spending, once they get started, once the toothpaste is out of the tube, it's very hard to put it back in. So I think government spending and federal government power has to be checked and given back to the states. I think 49 of 50 states have a balanced budget amendment. So there are limits at the state and local level, even though there is a fair amount of deficit spending there. There are limits, whereas at the federal level, there isn't the case. That isn't the case.
For anybody who's not on Twitter, the Department of Government Efficiency sent out, I believe it was yesterday, maybe the day before, a chart of the tax code words.
Oh, really?
And they said, should we take a look at this with a question mark and an exclamation point?
Yes.
So I'm encouraged that they may not just be looking at the spending side, but they may be looking at regulatory encroachment as well as part of the executive branch, which is where I think they're going to find a lot of this.
Agreed.
And so, the other issue that the Democrats love to talk about during the campaign is tariffs. And anybody who studies history knows that for many years, the textbooks said that the Great Depression was caused by the Smoot-Hawley tariffs, among other things. How do you think this is going to play out, and how dangerous is it for our economy and for markets?
Well, listen, I think, knowing the advisors around President Trump quite well, people like Larry Kudlow and Art Laffer and Steve Forbes, these aren't really pro-tariff people, but they are people that have become convinced through the power of Donald Trump's arguments that there was really no such thing, particularly when it came to China, as free trade. China joining the WTO is not free trade when the other party is fixing its currency. So a lot of this idea of free trade was largely the idea that the U.S. would subsidize the rest of the world in exchange for peace, which is again, a very good idea, made a lot of sense in the post-war period. But it was never designed for the American taxpayer to subsidize a growing middle class in the rest of the world. If that happened to happen as a result, so much the better. But it wasn't designed to essentially benefit elites in the United States and kneecap working class and middle class people in the States at the same time. And so I think President Trump understands that. I think also he's a commercial real estate guy from New York at heart, right? So he's a negotiator. He understands that the U.S. consumer is probably the greatest economic prize in the world. And he's willing to negotiate on trade or use trade as a lever to achieve both economic and political goals, which is, again, is something permanent Washington. It drives them crazy. But if you're a businessman, it makes all the sense in the world. Which is to say that, first of all, you're not really necessarily a big fan of multilateral trade agreements. You're more focused on bilateral trade agreements where you're getting something in return for this great prize, which is the American consumer. And with Mexico, that might mean fewer fentanyl shipments through the border or more control of the border. With Germany, that might mean greater defense spending for their own defense, where they buy U.S. goods. Again, there's nothing wrong with thinking that way. It seems to me, for some reason, there's a sense among intellectuals and big government types that there's something wrong with trying to protect America's interests. And to me, a regular person, a normal person would say, why wouldn't we do that? Everyone would benefit. And so President Trump, I think, understands well the idea that you don't want to risk a recession necessarily just to make a point. But you do want to have fair trade and reciprocity in trade with, especially with countries that might not have our own best interests at heart, like China. So everyone else seems to be operating in their own best interests. I don't think it's wrong to think the U.S. should operate in its own best interests as well.
Well, and Donald Trump is a deal maker. That's his history. And the best way to get good deals is to create an impression ahead of time that the that there's a onslaught coming, and get people prepared to start giving things back to you so that they can avoid the onslaught. So it's an interesting same thing with immigration. He's coming at it full blast, and everybody's complaining about it and how terrible it's going to be. At the end of the day, I think it does seem like he's going to be cutting deal after deal, and all of the result on the other side is likely to be an improvement from what we've seen in the past.
I think so. I think you're right, Bob. I think the man is very practical. It's very pragmatic. I think it's a benefit to the American people that he's not an academic, that he's not an intellectual, that he's not an ideologue, that he has a different way of viewing things that is much more pragmatic, that is, and again, focusing on what's in the best interest of the American people. Frankly, intellectuals and academics scare me because there's a tendency for them to believe their own views should be the case regardless of what the outcome is. And there's a certain true believer aspect of this. Business people, as a rule, we have to be more pragmatic because we can go out of business at any given time. So you have to change as the circumstances change, which is not always the case among academic class. So this is, in my opinion, it's a better way to go.
I think deal makers know that they'd much rather be on the other side of the table of somebody who's thinking it through very carefully than because you walk in with a sledgehammer and they'll think it through and then they'll give you what you want.
Right, precisely.
I think that's so. Along those same lines of this deal maker transactional approach, geopolitics has not really affected our markets or our economy for many years as the situation seems to have continued to degrade. Part of that, I believe, is because our economy in particular, is so big and strong that none of these have really threatened economic activity or markets directly yet. How do you see the geopolitical outlook changing and affecting markets and the economy?
Well, Bob, I'll do the best I can here. I'm certainly no geopolitical expert, but I am very much of the view of peace through strength. That if you want peace, you should prepare for war. And I do think having a strong military in the U.S. Makes a lot of sense if we want peace. I also think it makes a lot of sense for other countries that have benefited from the U.S. security umbrella for many, many years to stand on their own 2 feet and provide for their own security. And that's simply just an economic reality also. The U.S. is not in a situation in which it can provide that umbrella indefinitely and without cost, right? So I'm of the view that regardless of whether Donald Trump is president or not, the pandemic largely revealed the idea that we are deglobalizing, that there has been this goal, and it's a very nice goal of globalization, but it only really works if societies and civilizations have the same values. And it doesn't work particularly well among civilizations that don't have the same values. Samuel Huntington talked about this in his book, Clash of Civilizations, right? Where the idea is that the tensions are not necessarily going to be among nation states. It's really going to be among ideas, among the ideas that bind us together. So from an economic perspective, that suggests to me that there's going to be, unfortunately, defense spending is a global growth industry. I wish it weren't the case, but it's probably better than the alternative, which is to weakness, I think, invites aggression. So that's probably going to be the case. It also means that I think from an economic perspective, that supply chains are probably going to get shorter, which is to say goods are largely going to be produced closer to where they're consumed. And so this was something that was, Donald Trump talked about this in 2015, 2016. It seemed to be way outside the mainstream of where economic thinking was, but it's very much in the mainstream now. It's not seen as outside the pale. I think there's a lot of people that are recognizing that he was really right about some of these issues, and I think the pandemic really revealed that, especially with regard to China. I wish I could say that the geopolitical tensions will lessen. I certainly don't know. But I do know that prosperity is one of the things that helps promote peace, generally speaking. And so I think a strong U.S., a strong economy will probably do more, American economy will probably do more to promote peace than anything else I can think of.
I would think so. And we've seen some early indications when Qatar expelled Hamas,
Right.
which was the base for negotiations the day after Trump was elected or 2 days after. I think that there's a feeling around the world that everybody better tighten up a little bit before you get too aggressive. So I think that's probably right. It's curious that the Biden administration would go ahead and allow missiles to fly into Russia only 70 days before a new administration.
I mean, this is something too where, I mean, I don't think anyone's a big fan of Putin or Russia, but by the same token,
No.
there's a recognition on the part of the Trump administration, I think, that a lot of the people that have been sacrificed at the altar of quote unquote free trade are also the same people that are in the military, or they're the people that are fighting these wars or are put in harm's way. So the elites on the coast generally they benefit from quote unquote free trade. They're not harmed in any way by forever wars, but the same people seem to be paying the price every time, and that's not the way U.S. was really designed. It's not fair. It's not just, and I think this is a better way of going about it.
So all of these things seem to be a bit of a tailwind for our economy and markets, but the backdrop of forever deficits and unrepayable amounts of sovereign debt in the United States, and now I guess it just crossed 36 trillion.
That's right.
We did, as I mentioned earlier, we spent some time on that last time. How much of a change is there, and what are the prospects?
Well, it's Bob, it's tough. I'm gonna tell you, once these things get going, and I'll just be very frank, the new administration this isn't going to be a piece of cake, right? This is going to be, there are a lot of entrenched interests that don't want any cuts in government spending. And also, if you're taking the deficit from 7% of GDP to 5% of GDP, that obviously will be a drag on economic growth. What you're hoping is that drag, so quote unquote, results in greater productivity and greater opportunities in the private sector. Having said that, though, this is not. I would say the Trump administration is not being dealt a great hand here, either in terms of the fiscal situation or on immigration, for that matter, because I'm looking at things always through the lens of the economy. You have probably 15 million people who entered the country over the last several years. That has been good for economic growth and probably weakened inflation in the short term. But the issue now is that if you have to deport all those people, that'll probably lift wages and slow economic growth. If you allow all those people to stay, they're probably going to start using credit, which means that's also going to be somewhat inflationary. So there are some tough choices that are going to have to be made in terms of either immigration or in terms of government spending that will probably result in some pain. But again, you're trying to get to a good long-term answer, something that is sustainable. The other side talks about sustainability all the time, but they don't talk about sustainability of thought or sustainability of economic models. And so, to me, this is we have to get something in place that is more sustainable, so that we're not faced with the bill coming due as far as significantly higher interest rates and significantly higher inflation.
I guess let's talk about energy, because that's one of the first areas of deregulation and certainly one of the loudest areas of Trump administration focus. I'm curious what the energy stocks do if the U.S., which is the largest producer of oil, begin to pump a lot of oil. If we were to change the amount of production, I would think that we would have the greatest impact on pricing around the world. And is this I view this as favorable to stocks, but on the other hand, it may not be as favorable if the supply expands rapidly.
Listen, I think that's fair. In the first Trump administration, the stocks did terribly. And the great irony is the best performing sector during the Biden administration, even better than technology, has been energy, right? So, but in terms of, we're not necessarily, obviously, President shouldn't worry too much about the stock price of energy companies. He should make it as easy as deregulate as much so that companies can make their own decisions about how much to drill. But they should not be prevented from producing more by the federal government. So easing the leasing process, easing access to pipelines, allowing liquefied natural gas to be exported in a bigger way. All those things are positive. They may not be great for shareholders in the short term, but they're enormously positive for the American economy. And over time, to the extent to which the American economy grows, energy shares will also do well, will benefit from the fact that there'll be more consumption. So I wouldn't doubt that there is a chance that there's somewhat more of a weight on the price of West Texas Intermediate. It'll probably be lower a year from today than it is now, and that may not be great for the shares in the short term, but over the long term, it sets the stage for, again, more sustainable economic growth. We're the only country in the world I can think of in history that is ignoring its own natural resources. I mean, up until 1945, countries would go to war over natural resources. They did not see it as some sort of luxury to ignore them. Again, I understand the environmental concerns. I fully support them. But again, you have to balance those out with the needs of people as opposed to just, very kind of highfalutin ideas that may take hundreds of years to kind of pan out.
Well, it's very easy to overlook the importance of energy in economic growth. It's the fundamental lifeblood. And Donald Trump was talking about this on the campaign trail, saying that I'm going to drill, baby, drill, and gasoline prices come down 50%. Quite an astonishing prediction. What if he's right?
Yeah. Well, as someone who cares about, I like to think I care about people, and there's still 1 billion people on Earth that don't have access to electricity on a daily basis, right? And the idea of not fully accessing or making use of something that would provide energy would be inconceivable and should be inconceivable. Here we're taking it for granted, and we shouldn't do that because economic growth benefits everyone, and it especially benefits those least well off, right? So there's for some reason, environmentalism has become a little bit of a secular religion where people stop doing any sort of cost-benefit analysis. Everyone wants clean air, clean water, granted, but it's also, those are things, if you don't have a job, it's harder to enjoy clean air and clean water, it seems to me. So there's a delicate balance that needs to be struck. I think it went far too overboard in the Biden administration, and I think this is just a return to just more common sense approach to environmentalism.
Well, the other side of the coin of energy is what we're talking about, which is climate change. And it dawned on me this year for the first time, how do people, until the economy responds to it, it's hard to gather a lot of support. I understand that the Florida fund that allowed for insurance to be provided, flood insurance and storm insurance for homeowners, has been depleted this year after the 2 hurricanes, and that because private insurance hadn't been covering it anyway, it's either likely that housing prices will decline rapidly in Florida because of lack of insurability, or the cost of that insurance will be spread, which is where I suspect we're all going to notice it if it were to continue. And there is a chance that we wind up getting an economic hit across the economy as insurance and as insurers raise prices to cover those dangerous places. Is that something you've done any work on and thought about?
I haven't. I've done a little thinking about it though too, which is to say that there are places where you probably shouldn't build as well in terms of, so that there is. I'm a free market person, so I mean, if you want to build your house on the water, I mean, more power to you. But expecting other people to subsidize that decision, it seems to me to be a little bit much. And so if you want to self-insure, that's okay. And again, you want, but I'm not a big fan of spreading out those risks to the broader population for people that are maybe making different decisions. And so I'm certainly not an expert in this, and I have great sympathy for people that are affected by these storms. But I also
Yeah.
think that it's hard to have it both ways, right? So if you want to bear those risks, it seems to me that you should bear the financial risks as well to those decisions. And that doesn't mean somebody that's living 10 miles inland that gets hit with a storm and then needs help. Clearly, we should provide help for those people. But it's also, again, as I said, it's probably a little too much to ask for the entire population to bear the costs of building in places that are in harm's way.
Yeah, I think that's right. The private market probably will settle this up. If insurance companies want to start spreading that risk, then other insurance companies will come in and say, well, we don't insure anything in Florida, so we'll give you
Right,
the
right. We'll
price for
charge
your area.
significantly higher insurance on the places that are in harm's way, and right, we'll compete for everyone else. Exactly right.
So how about just sectors that you like and don't like going forward? My view is that we're going to have to take a dose of financial repression where inflation will be held above rates for a while so that the currency can ease back and debase so that this debt is less onerous. I only base that opinion on history. It's always
Yeah.
happened before, and we should expect it to happen in the future. If that is true, is that a major backdrop, and does that cause you to think about certain sectors over others for the long run?
Well, generally speaking, and again, I'm not a big fan of financial repression for long periods of time, but I also absolutely, Bob, I recognize your point, which is to say, you can't slam a car into reverse when it's speeding, right? You have to kind of ease into these things to get it back to some more sustainable pace. At the margin, I would say financials are probably the biggest beneficiary, at the margin in the short term of deregulation of the financial sector. I do think financials, in terms of their compliance costs, will be better off. I do think that you're going to see more deal making, which is probably going to be very good for financials as well. Financial repression in and of itself is not particularly good for bank profits, obviously, but it depends on to what extent it's being done. But personally, I like the financials here quite a bit. I also like industrials because I do think we are probably going to be spending more on defense. I also think we're going to be spending more on necessary infrastructure, roads, bridges, civil engineering. There's still a fair amount of spending as part of the Inflation Reduction Act that some of it will be clawed back, but which I think the unnecessary parts hopefully are clawed back, but the things that did make sense that would improve productivity, I think will continue to be spent. And then energy, I do think that the idea of leaning into energy, not just tolerating it, but actually making it a true export market for the United States, I think really benefit pipeline companies, benefit midstream energy companies, LNG exporters. So there are places to be. There is headline risk in certain sectors like healthcare, like let's say E&P, energy producers, maybe consumer discretionary because of the tariffs. But generally speaking, I kind of think that that there are going to be places to invest that look pretty attractive to me. Artificial intelligence and tech, in my opinion, especially the technology companies that are focused on artificial intelligence, it seems to me, even though they may be expensive, I have a feeling they're going to continue to outperform simply because there's absolutely no sense that spending on AI is slowing down. I think a CEO out there is probably more at risk of losing his or her job by not spending enough on AI rather than spending too little.
And I imagine that's the picks and shovels plays more than the providers
I think
of
so.
the service.
I think that's right because it's we don't know, right? I think Bill Gates was famous for saying people tend to overestimate technology's influence in the next 2 years, but underestimate its impact over the next 10 years. And I think that's true. And sometimes benefits show up in places that you're not expecting. I've heard people I'm a macro person, top-down person, so I'm not a stock picker, but I've heard people make very, very compelling arguments that the biggest beneficiaries from AI will actually be financials, just to the extent to which they can cut down enormously on back office costs and all the rest of it. And that could very well be true. It doesn't necessarily have to. It could be in more prosaic industries where you can automate them probably to a greater extent than you can in other industries.
So there's been one sector that has been down and out for a decade and maybe two, and that's the small cap, U.S. small cap.
Yeah.
You mentioned earlier a lot of the benefits of a rapidly growing government tend to the employee employment is disproportionately allocated to large companies. This might be an indication of that or not. But how do you like small caps going forward?
Well, listen. Bob, I'm kind of more of the view that you want to be in higher quality small cap companies. So the S&P 600 versus the Russell 2000. And the reason why I believe that is that an unfortunate side effect of having QE for so long is that you've created a lot of zombie companies, which are companies that are generating enough cash flow to pay their debt, but not enough cash flow either to pay the debt down or to grow. And so one of the things with avoiding a business cycle at all costs, with avoiding a recession at all costs, you never get the cleansing in the system that allows, let's say, small cap investing to really take off. Small caps in general tend to do best when you're coming out of a recession and a rising tide lifts all boats. But if you peg an economy in late expansion for 15 years, in some ways it's not surprising that small caps don't do as well. And so you don't want to be rooting for a recession, of course, but it seems to me if we're looking at a continuation of this late cycle, that you want to be in higher quality small cap companies that are generating cash flows and profits. And that to me, it can be a very good trade. But I would be careful on the Russell 2000, be more in the S&P 600.
One last subject, and that is everybody's talking about a red wave in Congress this election. But I think the more accurate depiction is a crypto wave. There were 270 plus House members that were explicitly pro-crypto who won, and only 115 anti-crypto. So there's now a majority who are supporting the guardrails of crypto regulation. And therefore, I think there's going to be some development over, once this gets cleared up. And then Senator Lummis has a bill to create a strategic Bitcoin reserve. What are your thoughts on that? The explicit purpose of that for the pro-crypto, the pro-Bitcoin people.
Yeah, well, I think this is
Bitcoin
a very
being different.
I mean, I would say J.D. Vance is probably the most pro-crypto member of Congress, and I think it's good for the dollar to have competition. I think one of the great risks of continuing on the path that we were on fiscally is that they would outlaw competition to the dollar. And we did that in the 30s by suspending the convertibility of gold to the dollar.
Yes.
And dollar to gold, rather. And I think we were on a path in which eventually we were probably looking at a central bank digital currency in which they would get rid of cash. And so that's what happens when you run debts that are out of control. You kind of you try to close off as many of the exits as possible.
Capital controls. That's right.
Exactly right. So to me, this is a positive thing, and it's not necessarily an endorsement of crypto as an investment. I personally own gold. I don't own any crypto, but I'm not against crypto. I'm pro competition. I think people should be allowed to
and
invest
innovation
in
and
whatever they want to invest in. And
exactly. Take the technology and run with it.
What's that?
Take the technology and run with it.
Of course.
If you can create companies that have value, that's great.
Yeah. So so I think I think again, it benefits the United States to have competition. The exorbitant privilege versus other fiat currencies, it's a blessing and a curse, right? It's a blessing because you can get away with bad behavior, but it's a curse because you tend to engage in bad behavior. You know, if there are other options for people to choose, that introduces a certain frontier justice that allows policymakers to come to better decisions. So
That's right.
I'm all for it. And I think this is, and I think that's the way J.D. Vance thinks of it, as really kind of a function of liberty, of people to make choices about their own savings and how they reserve their own savings. And I very much support that idea. And I think that's, at least for the next 4 years, that's going to be very much the case.
Well, that's fantastic. Jason, it's so great to see you again. Thank you so much. This has been a really interesting interview. And I have just for people who are watching, I have a number of other interviews about dollar as a reserve currency and financial repression and all of these subjects that I go into more depth on. But I really appreciate your outlook, Jason. Thank you so much for joining me.
Thank you so much for inviting me. I look forward to coming back.
Hey, if you like this clip, please hit the subscribe button. You might also want to check out some of the clips I've posted with my many other guests. My interviews all address the simple question, how screwed are we? We ask experts about the problems that make Americans so pessimistic today, but we also explore why there's never been a better time to have been born than today. Join us for perspective on today's challenges and opportunities.